Hello, everyone. Welcome to a new episode of One Vision, the FinTech Fuse. This is Theo and Barb, your hosts for the episode. Now, joining us today is Katie Quilligan, early stage venture capital at BankTech Ventures. Thank you so much, Katie, for joining us for the start of the new year.
Yeah, thanks for having me. I'm excited.
Yay. So, 2024. What a year has been. I don't think we lack adjectives to describe how it has been, but curious to hear from your perspective looking back. What are the top few things that stood out for you?
Yeah. I would say, of course, the NAP saga, probably not much more needed to say there. The finalizing of 1033, and particularly because we're a strategic fund that is focused on bank enabling technology. This one was a big one for us and thinking about what does this mean for our banks going forward. Of course, I think with my third one that has really been a big part, the election, that we're not quite sure what it will mean. But I think in general, those two things really impacted us, and especially with the elections, there was so much of a wait and see that we were hearing from a lot of our banks. And for context, for anyone who doesn't know, we have banks as our limited partners in the fund. And so part of what we do is we get to meet with them and hear what their priorities are. And a lot of that time leading up to the election was just, we're going to see, we're going to wait, we're going to hold off on doing anything. And I think, again, we're a little bit in that holding period. I think more, I guess, positive outlook because they're hoping that there'll be a little bit of deregulation. But there's still a lot of uncertainty on what that's going to look like post Trump coming in.
So speaking of outlook, I think just when we all thought, fintech was maybe getting a bit too quiet, Sneak Attack came out a few announcements later this year. So just we wanted to know some of your thoughts then on kind of the funding landscape in general. What do you think we should all expect from, 2025 from a funding perspective?
I think it seems like a lot more positive perspective than it had, at least coming into last year. Still, I would say some caution around there of like that we're still have moved back to we need to see our companies having a clearer path to profitability and sustainability in their growth models. And I don't think that is going away. But hopefully with Klarna now saying we want to IPO and us seeing some of those other players potentially looking at that there might be a little bit more excitement about coming in to this next year. And of course, again, like back to that deregulation, that seems to have put just a little bit more pep in the step of fintech investors.
We're going to circle back end of the year and come back and ask you again.
Okay.
I think cautiously optimistic is a good word, but
Yeah.
as we have learned from prior administration, chaos and uncertainty do reign. So I think we're going to see a lot of up and down, and managed by the hour. It's going to be an interesting ride, for sure. Now, we cannot obviously have any conversation the past 2 years, 3 years without talking about frontier technology, especially AI. It's been front and center in a lot of conversations. We have big banks like JPM, Bank of America, Cap One, going leaps and bounds ahead of many other institutions, especially the mid-sized and smaller ones, who tend to proceed more cautiously and for good reason. There are obviously questions around, can we find talent? Can we find resources? Can we find the right use cases? Are we going to, get into trouble, right, with hallucination and all of that? Curious to hear from you. Do you think, based on, what you've seen in the past year, do you think we'll see more activities or newer use cases coming out? Or are we going to be stuck with, here are the few that do really, really well, and the rest we're going to play with chatbots and kind of holding pattern?
In terms of if we're looking at this from the smaller bank perspective, I think we will continue to find new use cases. Maybe at least new for them. There might be at the larger banks that they're starting to do it because, like you said, that they are have more capital to put to work there. But we are seeing, at least from our perspective, more of our banks leaning into trying new solutions. And I think particularly where it's not a AI first, like it's not like here's the shiny object, let's throw it at everything, but more in the particular use case of I have this problem and this can now be better solved if there is some component of AI inside of that. And so I do think that we'll start to see more of those use cases. And as that technology matures, that they'll be a little bit more leaning in, or at least in the beginning, just wanting to be more interested in talking about it and embracing that. So in areas like fraud detection, that just feels like such a big one. And I know that's not necessarily a novel use case, but I do think that it's one that now there's more acceptance that if I do want to have the ability to fight fraud, I'm going to have to use AI and same capability because the fraudsters are also using AI. I also have heard more and more about the interest in using the data that our banks have. And again, like maybe not a new use case, but more leaning in there and really understanding of how can we do this? And the companies that I think will succeed will actually help the banks clean their data and help use it and help them get to that point where they can use it in a smarter way, which will then lead hopefully to more personalized financial services and really being able to do that at scale, which would have been hard to do with previous technology. So I think that those will continue to be the areas. And then, of course, like agentic workflows, I think we're still in its infancy of what that looks like. But there's a lot of possibility there, especially in these industries where we know there's so much just manual work and work that I don't think anyone is particularly excited to do. I don't want to be inputting into one system and then move to the other system, input there. And like, that's not a good use. Like someone's not learning their job or learning how to make better decisions based off of that. And so where we can automate those features and then allow someone to spend more time really learning what it is to underwrite a loan and spend more time with like the data that matters is where that gets me excited. That's what I'm excited to share with our banks.
You know, you said so many things in there that resonate hard with me. Having been a banker for a couple of years now officially, and everything from I do my job because Jane taught me to do this particular series of steps when I got here, and I still do these series of steps. How do we help people unleash themselves? It's the Simon Taylor quote of, what's the value proposition of the human in the digital world? It's not following a series of steps every day, right? And then just because you have the data doesn't mean you can use your data, right? Making that data usable. I certainly, love that comment. And for any of the bankers out there listening, quit bringing knives to the AI, cybersecurity gunfight because your opponents are not, right? So, I mean, we could go all day on any one of those themes. And so I guess we'll have to have you back to talk about those more. So, you talk a little bit about shiny objects and use cases and things. I always think of you, Theo, when we talk about the next item on our list of topics, which is payments and especially the prevailing use of checks.
Yes.
And I feel like I'm just dragging up a sore spot every time we talk about this one, but it's the Theo talking about having to write herself a check to move her own money around. I can't get that out of my head. And, there's a stat out there, maybe it's somewhere in the order of, say, 15% of business-to-business payments are still on checks, right? 21% for real estate transactions, which are very significant movements of money. Mm-hmm. In your view, you've got a very broad view of the industry and landscape. What is holding people back from increasing their utilization of, real-time payments or actual digital payments? Is this just a matter of time? Are we distracted now by the shiny Gen AI syndrome? And we'll maybe link this in the show notes later. There's an interesting report there from Capgemini that talks about this on the world stage. What are your thoughts based on what you see?
Yeah, I think that almost similar to what we see with some of the adoption of AI, actually, of that I've always done it this way. I will continue to do it this way, even if it's not the most efficient, is a big part of this. And that there is just like these deep rooted legacy systems, and they might have complex corporate accounting processes. And so to go and think about changing that becomes very difficult. Like we're not talking about like when it's check fraud, like of course it can happen on an individual level, but I think like where there's really these issues is these large corporations cutting checks and doing things. And like that's not as easy as just telling a consumer, hey, like stop doing this. Like there's other options. Like I think that's, I mean, that is just a little bit easier to think about changing. You're a single person, you can do that. But if we're looking at a whole organization, them switching and then thinking about like what is the cost of upgrading my infrastructure, that becomes more difficult of a conversation. And then on the bank side is like we think about moving into more real-time payments, they also have to think about the cost of upgrading their infrastructure and like how do they deal with their own complexity with existing systems. And then not just that, but a lot of banks earn money on wire fees. So are we going to take that away? And I know that's not check fraud, but like that is one piece that keeps us from moving to real-time payments, because how do you monetize this? Or is it just going to be the customer assumes they're going to get this for free, and then once one bank does it, everyone has to fall behind? And that makes it difficult for anyone to want to do anything besides just being a receiver. And these are some of the things like we talk with our banks about it, like what are those strategies? How do we think about them to move forward? Because this is, I think it's one of those issues where like ready or not, like it's going to come and you're going to have more of your commercial customers asking for it. And once they do, you're not going to want to lose the business because you don't have that, what I think will eventually become table stakes. So I just, even the first step of let's talk about it, let's put things into place is going to be a huge piece of that. And then also probably just a big piece is education of like for those corporate customers of what are things that we can do to help you move off of checks? Like, are there things that we as the bank can help you do so it becomes easier to not write the checks? It becomes easier to do real-time payments or to find other ways of paying your vendors that don't require that physical check anymore. But all of those, like very, easy to say of like, oh, just do these things, but actually implementing it is so difficult. And that's the reason that we see the very slow moving of this. But I think hopefully over time, and also like we know our banks are very annoyed by check fraud. It is one of the top things we get asked about is how can you help me with my check fraud? So the fact that it is a annoyance, it's something that the banks have to deal with and can be a very huge cost, makes me hopeful that we will continue to see change here.
I feel seen. Barb, you're absolutely right. This is a Theo problem that I whine about every single time I can get. And I can give you 3 examples. I just got paid by a client with a check. Theo has to go to the bank branch to deposit the check because it's a business account and it does not support depositing the check on the phone. Theo goes to the bank branch, deposit the check. Theo writes a check to herself so I can move money from my business account to my personal account. Theo writes a 3rd check this month so that I can deposit money in my self 401k because my very huge global financial institution that does the 401k does not accept depositing money in your self 401k electronically. So Theo does a trip to the bank branch and writes another check. It is a crazy problem to think about. I would love to not to have to do all these. So my only other way to go around the problem, and you're going to laugh, Katie, and I think Barb, is to actually initiate a transfer from my very big bank account that I have my business income and send money over to my Apple account. And then from my Apple account, change money to my personal bank account, which, by the way, is the same bank as the business account. Convoluted, but it works. That's the only way I can get around with writing myself a check. I still have 2 checks to do, but at least I can do 1 less. So it is a very much US problem.
Maybe our listeners can write you a check writing agent. Somebody out there is solving this problem for you right now as they listen.
It's painful to think about. And Pam and I had an article coming up that talks about basically payments in the US based on our dinner experience, because it's dumbfounding seeing what we went through. And I think Katie and Barb, actually you guys were there too at the dinner, and then having to being able to go to Europe and Asia and seeing how easy it is, pay by QR code or just split electronically, or I even have a digital bank account in Hong Kong, and it's instant transfer of money, and it's fee-free. Yay! It's like the technology is there, right? Like all of you guys know, and Barb, living in Canada, you guys don't have to go through all these. One of these days. Now, talking about fees, you mentioned wire fees, and yes, I do have to pay my bank to deposit the check, by the way. There's a check fee. So
Oh my gosh.
talking about fees, CFPP issued a rule recently that talked about reclassifying overdraft fees as loans subject to interest rate disclosure under the Truth in Lending Act. Now, to be fair, CFPP did offer multiple options, but regardless, the challenge is that the rule applying to the largest banks and credit unions that have more than 10 billion assets means that it's going to have a ding in their income. Like it or not, it is a source of revenue for them. So, curious to hear from your perspective, what do we think in general is going to happen with this particular ruling? I know that, a lot of institutions are very not happy about it. And in a broader sense, what do we think is going to happen with CFPP and some of the rulings with the next administration coming in?
Yeah, I mean, I'll start
Crystal
with the
ball.
general one. Yeah, crystal ball. I mean, the CFPB in general, if we look at, like we said, we have no idea what's going to happen. Every day, every minute, it will be unexpected. But if we look back historically, typically these types of organizations, like they only come about during financial crises, and there's only changes to them during the financial crisis. So the likelihood of it being completely removed feels minimal to me, I'm gonna say, with an asterisk of we don't know. But I think that if we actually look and that it will likely be that the scope of what they continue to regulate will be more narrow, and that they're not going to have as broad of a reach that I think they did during this administration. And so my guess is maybe not the same strength that they have to enforce things. They will still continue to push things forward, and that there is public support for consumer protection, and to completely remove that away just does not seem like it will happen. It just will likely be a lot more lawsuits and slower to have changes happen. And that's my guess, that leading back to the first question of what's going to happen is that we're just going to be very much in a wait and see, and that everyone's going to fight it tooth and nail by any means necessary. And so if I'm going to put my money on the first one that continues to happen, it's not going to be this.
So if we can get you to shake that crystal ball one more time, or maybe it's a magic 8-ball, I don't know.
Okay.
Looking ahead, what do you think things are top of mind for banks, or maybe should be top of mind for banks in 2025?
Yeah, better data usage, like we had talked about earlier, of I have this data, how do I clean it? How do I use this to create, I think, a better customer experience? And I'm hopeful with some of our conversations that there is more of that shift of putting the customer first and trying to think of it through that lens. And so that's one area that I think is, and then of course, again, meaningful AI use cases, which broad, but I'll go a little bit more into that of like thinking about the efficiency workplace. How could our bank benefit from agentic workflow? We have a company that we've invested in called DeepSea that is very much focused in this area of taking those back office processes and making them more streamlined and making it more efficient. And I think efficiencies banks very much understand. And so putting it into language that can help them do that, and like I said earlier, actually using their data in an efficient way will be impactful. And then cybersecurity and digital resilience is going to be important for them to continue to think about, particularly like we talked about earlier, of that these bad actors are using AI. So you need to be ready to combat with AI and other tools that are staying up to date. And then this is probably next year and will continue into the future years, but how do I bring in the next generation of customers? We always talk about like this great wealth transfer, but I think it actually will be like the great relationship transfer. Like if you are not thinking about getting the money before that customer has already died, and like if you're not starting to get into that account and think about talking to that next generation of customer, you're already too late. And so our banks need to be thinking about that now, both from how do I talk to the person who will own that account in the future, and also thinking about how do I bring in new customers who are younger and what does that experience look like. And I do think back to the first point of like the user experience has to be at the center of that and understanding truly what their needs are, because that's going to be different than what it previously was. And their level of expectation is different. So that will be an area. And then, of course, everyone's favorite one, compliance, I think will still continue to be there, even with a new administration and potentially deregulation. Compliance will still be a big issue. And lastly, I would say like small businesses and continuing to think about like, and that will be part of, I think, the bank's strategy of getting to new customers, of how do we better serve this underserved market, give them the tools that they need, help show them that we understand what their problems are to move forward.
Wow, do I love that topic of, the great wealth transfer, which is playing out, by the way. It's not like this thing that's going to come. It is happening right now. And I think it's multi-generational, right? Maybe the primary wealth earner was traditionally your spouse passes away. Now you're the holder of those assets and needing to figure out what to do with them. And, your point about, is the experience you're offering those customers even relevant to someone that has never interacted with you before and doesn't know the rules of what that looks like? And it might be completely intimidating because they never bore that responsibility for their entire adult life. How do you become relevant to those people before they sort of lock themselves in with whatever they're going to do with that money? Take the money and run, I think, is a big problem for those that are not thinking that through. So that's definitely a topic that's not being discussed enough. For me, I think I would love to see in 2025 banks thinking about how to bring all of these experiments to life. For many, many years now, we've all been talking about, bite off these problems in small chunks. Right? Figure out what works and, move and pivot from there. Move fast, but don't break things. Right? I think there's a sort of a swamp and probably hidden closet of failed POCs that litter the industry behind us. And I would love to see everybody just abandon the word POC. To me, that's just another moniker for innovation theater, and you have zero intention of ever making that thing real in real life. So I would love to see banks and others move on from, thinking like that on how do we pick our spots and maybe double down on those a little bit harder with true intention of, and we're going to see this to real life.
I think, just to add on to that piece of it of, if you do have this, your closet of your skeletons of POCs, thinking about too of like, what did we learn from those, doing a better job of like, what do we learn and what do we want to do differently in the future? Because you did invest the money in the resources. And so taking that and not getting stuck in that of like, let's just analyze and then never move forward, but taking that to what you're saying of now doubling down on that and using that to push forward. Because I think that often happens of, we do take on these big projects or we do things, but we're not actually stopping to say what was meaningful and what wasn't, and how do we go back and think about the ROI on this and what it could be, and are we really accurately measuring, and then taking those results and then investing in the ones that did move the needle versus the maybe like this was a really cool product, or like this was someone's pet project, or this was like the shiny object of AI of like, did I do this and it was cool, like what makes sense to move forward with, and let's do that in a really like smart data centric way.
Skeletons of POC. I cannot unthink that. And Barb, I agree with you and Katie on the generation wealth transfer too. I think what I'll add to it to help make sure that those who inherited the wealth do not run away, perhaps find a way to be helpful to them before they inherit the wealth, right? They're not, individual units. I think that that's always been one of my gripe with financial institutions. They look at me as me. They look at my husband as my husband or an individual, and the children as each individual. They don't think about how do we bring things together so that what they do is helpful not just to me as a person, not just to me and my kids as a family, but also to me and all of my responsibilities, right? My parents, they are part of my responsibility, right? So find ways to be helpful to me and to the multi-generation, to your word, Barb, so that you're there for them and they know that you're there for them even before you inherit this bulk of money that you've been eyeing for the last 30 years. I think it just makes things a little bit more genuine. Maybe that's just utopia world of me. Um, Before we let you go, I know that Barb had something that, she had mentioned that we really wanted to ask you. And I wonder if we can do a round robin on this because this will be fun. So is there a trend that you have observed in 2024 that you would like to see go away next year? I know that a couple of years ago, FinTech Futures used to do this, and they asked people, what is the one word that you would like to banish and put it away in the closet? So this is a twist on that, is what is the trend that you would like to see go away next year?
I think not surprising based on my other answers, but like overhyped, non-substantive AI feels like where there's no use case, it was just shiny, it was just cool, like that needs to go away because it's actually hurting the cause of like so many solutions that can move the needles for banks.
Barb, what about you?
So I'm going to pick up on the, generational speak. And I think, genericized labeling of people and groups is certainly not helping us in many arenas, but focusing on financial services, maybe we can move past the fascination with millennials at this point. I was actually having a debate with my siblings as to which of us were millennials or Gen Xers, and I will firmly say out loud that I'm a geriatric millennial because I don't identify with any of the characteristics of a Gen X. But I think it's a bit of a lazy approach at this point. And whether you're, thanking or blaming millennials on their avocado toast or whatever, right? I feel like we've actually moved on from that being the sole focus of what's important. You need to have a much broader lens than that. What about you, Theo?
I think I've seen people started saying Gen Z banking. Seriously, they have moved on from millennial. You're very right. They copied and paste what they did with millennial banking to Gen Z banking. I keep seeing that. I'm like, seriously, people, this is ridiculous. And I'm a Gen X. I don't know exactly what that means. I do see my kids fighting over between the two of them because they're 3 years apart, whether or not they're Gen Z or Gen Alpha. There
Oh
is
my gosh.
something about Alpha that they really do not like. So my daughter, who's 12, she kept saying, "No, I'm not an Alpha. I'm a Gen Z." I'm like, seriously, guys, come on, this is ridiculous. About me, I think I would love for the hype on AI to go away. It's actually fascinating if you think about it, right? AI has been around for a long time. We were talking about it and then we stopped talking about it, and the cycle came and went multiple times. And then the last 2 years is all about Gen AI, Gen AI. And apparently, the last few weeks now, generative AI is old. Now is agentic AI. And so if you dare talk about AI without mentioning AI agents, people will be like, well, wait, you're missing the boat. Like, really? To your point, Barb, about applying labels to generations, let's stop applying labels to technology. I want to focus on exactly what value we're creating and how we're helping people and helping businesses. I can care less what you call the tech. You can call it rocket launcher if you want. It's in the end, it's about what you're doing and what value you're delivering that matters. So, but it is 2025, so we'll see. But until then, we will let the crystal ball go and see what takes us from here then on. And thank you so much, Katie, for joining us today. I look forward to seeing you back in the conference circuit. It's going to be a wild ride. And for the rest of our listeners, thank you so much for joining Barb and myself for this new episode of One Vision. Happy New Year, and we'll talk to you all next week.